G'day everyone and welcome to Wednesday. My name is Michael, just another liquidity trader looking at where we're going today for Bitcoin, the S&P 500, the VIX and the DXY. So let's check out the Binance liquidation heat map on CoinGlass. So this is the 24-hour heat map where we were bouncing along 2 o'clock yesterday, 3 o'clock. We were really in a tight range-bound area, building liquidity to the top side with this strong liquidity to the south side of 30 million. We broke through at 11:30-ish last night. So basically we're starting the US Open. We broke through, we found a new range, and then this morning we began to liquidate at about 9:45. We started to liquidate, bounce, and we broke through all this liquidity to the downside. Now, if we move to the liquidation heat map as far as 24-hour rect liquidations, we see that we're at 195 million liquidations, dollars worth of liquidation. So there were 73,500 traders liquidated, and the single largest liquidation was on Binance with Ethereum, that of 2.9 million, which really sucks for that guy. Or girl, I hope they are doing well. So something I wanted to talk about today is the monthly returns of September. Everyone talks about it. You see on a lot of channels this table where we've got from 2024 to 2013, and we've already started. This was as of yesterday, returns for the month. So the average return is 4.7% negative. The worst it's ever been was 2014, where it was minus 19.1, and the best we ever had was a positive month of 6.04%. Now let's move over onto the Bitcoin chart. I actually drew this out onto this month's candle from the candle open. We've got the average, which we have just wicked down below. So the average is at 56,600 for the monthly average of a minus 4.7% move. The worst case scenario, which is minus 19.01%, takes us down to 47.755. And the potential best case scenario, obviously this has no indication that this is how it will happen, but basically we've just put the parameters of to where it has been in the last 9 years, and where it could 10 years, sorry, and where it can potentially sit either within or around. So if it's sitting around the average, then everything's average. But if we start to reach those outer parameters, then we start to see that this is an outlier style month, and things are starting to get a little bit more spicy. So if we were to move down into the hourly chart, let's have a look here. So we'll turn that one off, we'll turn that one on, and we'll reset the chart view. Okay, so here we were looking at yesterday. So we were expecting the move to the downside. Instead of coming up to grab a little bit more liquidity, we just fell down. So we've just we ranged, we fell, we ranged, we fell. We were bought up at a low of 55,611. But that doesn't mean to say that we are going to be like if that's the bottom. We definitely have had nearly $200 million worth of liquidations occur in the market, which puts a little bit of a reset. So with that being said, we get to redraw up these lines and make it a little bit clearer for us. But what we can also see is that the chart basically so when it was up here, we were price had come outside of the 2 standard deviations of the average trend line of that regressive trend line. Then, as we move it along, am I grabbing the right one? Where are we? There we go. And as we move along all the way to the end, what we find is that the standard deviation, that includes that movement in the average across that whole trend line. And what we see is that basically we have come down and we've just come to the average. So the average trend line is 56,750 and price is 56,636. So we're just below the average. We are pretty close to that average trend line movement of this entire down move from the, is it from the 9th? I can't remember. From the relative high of the 24th of August. So as prices come down, we're basically sitting within that range. Now let's just click on this uptrend from the 5th of August and we'll extend that out just a little bit. See, we've also, if we look at this graded, if we see this graded trend of this regressive trend line, we basically fell out of it. Let's just get rid of this one for a second. So if you see this regressive trend line, we've come out on the buy side liquidity, we've wicked and we've come back within. So that means that we still have this buy side bias, still can potentially hold up. So we still don't know whether we are in sell side liquidity. We're still on the buy side of it, so we do have a potential for a bounce. But while we are still in this uptrend and we're in a downtrend all at the same time, so we have the potentials to buy up and come back into the sell side liquidity and sell to come back down into the buy side liquidity of these regressive trend channels, while still also using these liquidation wicks on the hourly time frame to give us buy zones. So while prices, let's just quick reset. So while prices come down and had this liquidation event, I'm not looking at entering the market right now. I would look at coming back up into this area. Actually, what we need to do, I am looking at coming up into that area, but what I want to see is actually some zones that I can give you. So let's just tidy it up. Let's tidy up all these levels now. Alright, so that one has become a liquidity retest because as it comes through, these two wicks don't touch it. So it hasn't been wicked, which means it's still valid. Now, down here, oh, that was, no, that wasn't one, that's one. Alright, so we've got one here of our hourly liquidity retest. And this is becoming a daily liquidity retest. So we have to see if it comes up and sits back above here, or whether it's going to actually stay below for this day. These two, those two have been liquidated. This one is liquidated. This one is liquidated. And this one down here has been liquidated. So it's really cleaned up a lot of the downside. We've got no real targets here. And to the upside, we do have now, let's just go liquidity retest. So where this wick is, where both wicks on either side are below, so it's like a fractal. We also want to see one up here and one up, which is on the extreme side, but it's still in the buy side liquidity. But because we're down here, price can come up, extend past this two standard deviations of this downward trend channel. We could come up and touch here, so it's worth having it just to pay attention to. And just for the sake of it, we've got one more there, and that completes that entire down move. Hourly liquidity and one hourly liquidity level there. Alright, So what we're looking at here is now we've got a lot of sell side resistance. So we are seeing through here so on this side we're now looking at it as point of interest to go short, where when it was over here before price broke down, it was a point of interest to go long. So what we've had, let's pull that back in. So where we had these three zones of liquidity where a potential support could have occurred, now we've broken through. Now it's going to turn itself from support into potential resistance. Excuse me. So what I'm looking here is as price starts to creep up, as long as it doesn't come up with gusto and really blow back through, if it starts to tap here, I am looking for shorts back down towards this level. If, whoa, what the? Alright, let's just do that again. So if price comes up to here, bounces and finds resistance, I am looking for it to move down into lower prices, which means that the next target really is that 55,640. At the same time, that will become a daily liquidity wick, but anything below this regressive channel, so should price come up to here in the next hour and come down, we're looking at a 0.78% drop. If price comes down, goes across for 4 hours, the next target's 1.3%. If we go 6 hours, then we are looking at like a 1.7% to 2% move. So within the next 12 hours, we could potentially be looking at a 2% move to the downside. And that's a good potential move that we can actually grab to the downside. But we're also looking at, as price moves lower, we do have to bear in mind that this regressive trend channel to the upside, the bullish regressive trend channel, does have to be moved across. And price hasn't really come down to test these sides of the regressive channel yet. We've got, if you look at it, we blew out to the bottom and then we basically nearly touched the top, center, halfway up, halfway down, halfway up, center, halfway up, touch the top, and now we're coming back down to test the other side. Now, anything from here is really just, we've still got a lot of support down here, a lot of liquidity levels that we can challenge, but we want to look at just small moves to the downside. September is traditionally a bearish month, so that doesn't need to be your complete bearish bias. However, we do have to keep in mind that that is the narrative in the market, and that is something that we have to be aware of. So let me just complete this. So if we see price come up, find support, and stay above as we come in through the London session and towards the US session, then we could potentially be moving as a buy the dip opportunity as we move to higher prices, because we still have plenty of move to the upside. There's lots of fair value gaps of sorts. There's imbalances in the market where prices have just fallen through and there's no wicks that have touched. So with those imbalances, we've got several imbalances that, there's this one here, and as we come up, there's this one up here, and there's the one up here as well. So we've got lots of imbalances that we can move up and fill, which is a little bit magnetizing. So let's just write them in just for now. So we've got an imbalance out here. We've got an imbalance still here. And we've got an imbalance Now, as price moves up, these will inevitably get filled. So, because as price needs to move to higher prices eventually and inevitably, these will get filled. But we have to watch to see how price relates to them moving forward. But if we get above this area and this point of interest of resistance turns to support once again, then, so let's just put that there. If it becomes from that to Control C, if that converts itself back to support, then we can look to challenge these imbalances and look up to potentially 59,000 as our target for the upside. So if we get up there, otherwise we're looking to the downside as resistance to the sort of 50, 56, 300 level, or the 59,300 level for the upside. Alright, that's it for today. Thanks for tuning in, and we will catch you tomorrow. Alright, ciao.